Good afternoon, dear judges, ladies and gentlemen. Imagine a company that began with smartphone manufacturing, entered into Internet of Things, and is now building trendy electric vehicles. Yes, today we're very happy to present to you Xiaomi. We initiate a strong buy recommendation with a 42.31 Hong Kong dollar 12-month target implying a 37.28% upside. Now let's first begin with the business overview.
Okay, now let's start with Xiaomi's history. Founded by Chinese entrepreneur Lei Jun and headquartered in Beijing, Xiaomi entered smartphones business in 2011 and then built IoT ecosystem in 2014. And then Xiaomi went public in Hong Kong in 2018 and then entered smart EVs in 2024. Now, Xiaomi has grown as a technology giant. Xiaomi is now the world's top 3 smartphone brand and the world's largest IoT platform with over 1 billion devices attached. And also as a growing electric vehicle power, it has made more than 400,000 deliveries in 2025. Now, let's look at Xiaomi's business model. First, smartphones serve as a user acquisition gateway, and then IoT attach more devices and boost user retention. Internet services monetize the user base with a high profit margin. And finally, the smart EV expands the scenarios from mobile phones to mobility. So our message is quite clear. Xiaomi is no longer just a hardware factory. It has become a human car home ecosystem platform.
Now, what kind of market is Xiaomi comes in? First, smartphones. The global market is staging a mild recovery since 2025, mainly led by on-device Gen AI. The market is also consolidating, with Xiaomi solidifying its number 3 position with strong value for money appeal and premiumization strategies. Next, AIoT. Xiaomi consistently ranks among global top 5 in all major IoT segments, supported by its largest monthly active user base. And Xiaomi has continuously capturing market share. For example, increased 10% in China's white goods market over the past 5 years. Last, electric vehicle. China's EV penetration surpassed 30% in 2025, and Xiaomi's 2 models have both been huge hits in China. SU7 ranking number 2 in the B+ sedan segment, and U7 ranking number 1 in the entire SUV segment. Then, what makes Xiaomi stand out? Its human car home ecosystem is unrivaled. Based on over 400 consumer questionnaires, we found that the launch of Xiaomi's electric vehicle successfully elevated its brand, contributing to the premiumization across other products. The ecosystem also parts Xiaomi's 1+N retail strategy. By reducing high traffic stores for electric vehicles, Xiaomi successfully cuts its capital costs, enabling its asset expansion.
Now moving on, let's turn to the investment thesis. We believe the multi-engine and strong ecosystem will unlock Xiaomi's long-term value. Thesis 1 is smartphone competitiveness driving premiumization and globalization. We can see that Xiaomi consistently ranks top 3 in over 58 markets and ranks top 5 in over 70 markets, ranking top 3 across all the major markets listed here. Xiaomi's flagship halo effect, the dual brand coverage of Xiaomi, which is more premium, and Hongmi, which is more mass, as well as the technology like a camera, the recently launched Mimo AI models, all support its premiumization strategy in both China and in Europe. Thesis 2, the ecosystem flywheel, as mentioned, retains users and monetizes the installed base. We can see from the left-hand side chart, actually the IoT gross profit margins are relatively low, but with over 1 billion connected devices, they connect users, they increase connectivity, stickiness, loyalty, as well as the switching cost among different products and brands. Thus, the internet services finally harvest the profit, contributing to over 34% of gross profit in 2025. Thesis 3, EV validates Xiaomi's third growth curve and raises the platform's valuation ceiling. Xiaomi's EV wins because of its brand pull, as mentioned, the brand equity increase, the ecosystem fit, Xiaomi Hyper OS system, also compatibles with the iOS as well as the Android system, which is incomparable across other EVs. It is all compatible within one car. The execution credibility, only launching 2 years and is ranking consistently among number one and number two in EV segments in China, all proves its strong capacity. Thesis 4, the multi-engine structure. We can see the revenue breakdown is becoming more and more balanced as well as comprehensive over the past 4 years. Profitability projections are also very stable and sustainable in the long term.
Turning to financial profile, we flag up Zhubang analysis with 3 highlights based on our bottom-up model: upside profitability, operational resilience, and promising returns. First, upside profitability. Xiaomi delivered a 457 billion Chinese yuan revenue last year and will step into a new stage where EV leads future growth. Compared with EV competitors' EBITDA margin of 6%, Xiaomi holds a margin of 8% coming from its ecosystem synergies. Second, operational resilience. Xiaomi built 3 operational buffers. Buffer 1, the maturity of smartphone will guarantee flat costs and R&D. Buffer 2, the EV growth will sustain working capital with long-term cash conversion cycles at 2 days. Buffer 3, the interest coverage ratio will sustain a healthy financial position. Third, promising returns. We benchmark Xiaomi's core financials with key peers from each segment. The 5-year revenue CAGR is higher than most peers in smartphone and IoT, indicating strong growth. The leverage ratio sits at an industry low level, indicating strong safety. The ROE also surpassed most of the peers, indicating strong payoff.
Now, turning on to the valuation segment, we believe Xiaomi is undervalued with huge upside potential. So in summary, we chose some of the parts to value Xiaomi given its very distinct business profiles as well as differences in business maturities. We arrived at a 42.31 Hong Kong dollar 12-month target, implying a 37.28% upside. We also used a group level DCF as an intrinsic valuation to justify our sum of the parts valuation or act as a sanity check. And for reference, market consensus and 52-week price range mainly align with our valuation. So in detail, some of the parts for smartphone, AIoT, and internet services. Given its maturity as well as large scale, we chose to use next 12-month EV over sales, peers benchmarking to value each segment's value. For DCF, given electric vehicles' early ramp-up and huge potential growth in the future, we chose to build a stand-alone DCF model to value this segment's value. And adding up, we arrived at our target price. Here is also a reference for our sanity check, which is the group level DCF. We build our own beta, WACC, different scenarios, etc. Finally arriving at a 40.31 Hong Kong dollar target price, which is also above the 30% upside that we justified using our SOTP valuation. So these valuations mainly align with each other, further justifying our comprehensive valuation method.
Okay, let's now turn to Xiaomi's environmental, social, and governance performance. Xiaomi's greenhouse gas intensity remains high, basically primarily caused by its recent large-scale and early-stage investment in its EV manufacturing. However, management has actively set ESG goals, which is running ahead of China's dual carbon strategies. And socially, Xiaomi is recognized as one of China's most responsible enterprises. And on the government side, Xiaomi's dual-class structure led by Lei Jun effectively aligns the founder's interest with the company's long-term strategy. And in addition, ESG is currently in its early stage of development in China, which has no material impact on our valuation. And above our strong buy recommendation, we identified 3 key downside risks. First is the intensified competitive pressure, which could squeeze the margin. And second is the EV safety, and which could weaken the investors' confidence. And third is the geopolitical tensions, which might reduce the overseas revenue. And beyond that, we have done our Monte Carlo analysis, and which shows that the 87% of our observations are beyond the current market price, which justify our strong buy recommendation. And we have done a benchmark against Tesla and quantified our EV safety risks. Yet Xiaomi has been rapidly enhancing its driving technology and currently holding China's lowest accident rates.
So, in summary, we believe Xiaomi is well positioned for a platform re rating driven by ecosystem scale, potential EV growth, as well as its expanding profitability. Thus, we justify our strong buy recommendation with a 37.28% upside. As the slogan of the company goes, always believe that something wonderful is about to happen. We're very happy to present to you Xiaomi Corp. Thank you.
The stock has been in a downtrend recently, and close to a 52-week low. What do you think the market is getting wrong versus your positive thesis? And what's the next positive catalyst?
We turn to the SOTP part in the yeah. So we can see here that Xiaomi, yes, it is definitely running a nearly 52-week market low, especially if we compare it to the Hang Seng Index, which actually Xiaomi is included in. Actually, if we compare the market consensus median, which arrives at 41.84 to our target valuation using SOTP of 42.31, it actually is basically in alignment, or I would say very close to each other. So we do have a generally close view to the market or to the analysts that are recommending Xiaomi. I think what happened over the past 52 weeks is, first of all, the overall Hong Kong market has been seeing some fluctuations in stock prices. It's not only Xiaomi that is underperforming. The entire market, or I'd say the beta, has not been so well, right? Although turnover has been improving, the stock price, the concentration in technology, has been showing risks to stocks like Xiaomi. And Xiaomi covers wide ranges of business segments, including smartphones, EVs, AIoTs, which all expose these market risks or sentiments heavily. So they combining them together, it results in such a stock performance. But as our thesis have mentioned, we believe the smartphone and AIoT business are very mature. The internet business proves high profitability, and the EV is showing strong growth. So these would be our future growth potentials, or what we call re-rating for this stock.
And also, I want to add on a little bit that since Xiaomi has strong business in AIoT and smartphone, we still believe that now is a good time point to buy in Xiaomi, because since the transformation into the EV-led growth, Xiaomi may have some short-term pressure during this time, which have devalued its real value. But the success of smartphone and AIoT business has verify the Xiaomi's capability of doing the innovation or transformation to a new business. So this time is a time point that Xiaomi's future value is systematically undervalued. Any specific catalyst or development that you think will lead to re-rating of the stock?
Uh, well, there's no really specific catalyst or what as you have mentioned, but according to management guidance as well as our industry overview, we do believe the management guidance proves to put more investment in the EV segment. I think it was over the not over in the next 3 years, over 60 billion Chinese yuan deployed into the EV development. So that would be a strong focus in this segment, and thus we believe this will be a strong boost for our re-rating. As for our valuation, because we used SOTP, we are benchmarking against most of its market peers. We chose 27 core peers, actually, divided into, here's the calculation process of our SOTP, divided into the different segments. So if we compare their performance to Xiaomi, we have said Xiaomi has operational strong performance, strong profitability performance, and strong growth compared to its peers. But in terms of market comparison or valuation, it is still undervalued. We believe it is a good time to buy in.
As I understand the market, the auto market in China is incredibly competitive and incredibly fragmented. Um, how did they come out so strong with their first products so quickly, and how are they going to continue to compete in a market that sounds like it's incredibly difficult to compete in?
Let's turn to the industry overview and competition. Okay, thanks for your question. So I will answer you the first question: why Xiaomi's two models can be huge hits and huge success when his first launch. First, as you can see in the left photo in left graph, Xiaomi's price of target price segment is Chinese yuan 200 to 300,000, and as you can see that it actually shows relatively robust growth against other price segments. So this provides some EVs a very good and healthy market to enter. So this is one reason, and my teammates will add other reasons.
Yeah, I'll actually elaborate a bit further. Um, wait, sorry. Yeah, so for Xiaomi EV, right, there were various consumer surveys that were very interesting. So we could see that actually 29% of the Xiaomi EV owners previously owned BMW, Benz, or Audi vehicles, which we call BBA in mainland China. These are the premium vehicles. They turned to Xiaomi. So they were very attractive among these premium users, proving Xiaomi's attractiveness and continuous attractiveness. The second one would be iPhone mode. 52% of the owners are actually iPhone users. So they kind of turned into Mi fans attracted by the Xiaomi vehicle. And there was also 30% of female user base in the Xiaomi vehicle. If we say fundamentally what's good about the car, actually us three cousins of us all bought Xiaomi vehicles. The two cousins of them bought the SU7 model. My cousin bought a U7 model. And, we had a picture there. We were actually in the car testing it out. So the engine is primarily factored by BYD and CATL, which use the best batteries in China. Xiaomi's strong point lies in its AI cockpit. As we have mentioned, it has a Hyper OS system, which is compatible to iOS, Android, and Xiaomi's own ecosystem. So all users are friendly to use their car. The cockpit is very comfortable with every detail manufactured, and the engine also has I think, a record speed of 20,200 rotations per minute, which also set an industry record high. So whether we're talking about hard tech, we're talking about the inner technology about the car, it's always a wise choice, and the price is also very nice. So it's lower than its competitors. For example, Tesla Model 3, the price of that car. Yeah, so that would be like fundamental reasons for why to buy Xiaomi. And we also have the results showing that it's been a very good track record. Yeah.
Recently, the geopolitics is still very unstable, and there's maybe some resurging trade restrictions between different countries. How do you think this will impact Xiaomi? And have you done any analysis on that?
Okay, there is a case study like in 2021, Xiaomi was listed in the US end of the list, but it's different from Huawei's because Xiaomi's main business is basically like electronic devices, but Huawei's is like telecom infrastructure. So the restrictions on Xiaomi is basically like US capitals are not allowed to buy the Xiaomi stocks, and there's some restrictions on the financing. On the financing channels. So this is basically a real case happens on Xiaomi. But Xiaomi's solution is that they lawsuit the Department of Defense in the US. So and they win the lawsuit. So they were removed from the restriction list, and the U.S. capitals are can now successfully buy in and buy our Xiaomi's capitals. So basically, facing these restrictions and regulations, I think there are some mitigations. So firstly, Xiaomi can largely diversify their supply chain and localize their manufacturing. Also, Xiaomi can actively switching their focus not only from the US but also from the EU or Middle East or EMEA, and it's a lot of choice. Yeah.
Yeah, I'd like to add a point. So actually, we know that President Trump would be visiting China tomorrow. It's an official visit. So that's also a definitely positive sign for China-US relations, right? If we talk about geopolitical tensions, probably we don't only talk about downsides, but also like upsides. The oil price has been fluctuating heavily recently, led by Middle East conflicts. As Xiaomi pivots into EV, we definitely believe the EV segment will benefit from such tensions as well. So it's not only downside, it's also upside. And we have also conducted the Monte Carlo analysis. 87% of our observations are above the current market price. So even if there are some, geopolitical tensions, as my teammate has mentioned, there are mitigations already. and given Xiaomi's very diverse business segment, right, top 5 across 70 countries. So it's a very diversified, you know, geological split. We don't think that, one relationship or one tension would threaten Xiaomi's overall business or price. It's very diversified and it's mitigating, and the global economy as well as the macro economy is also turning towards a positive trend. Yeah.
How do you estimates compare with the consensus estimates from the market? In term-
Sorry, can you?
how do your valuation compare with the consensus estimates of the market?
Yeah, so as we have mentioned, actually, um, the market consensus high is 79 Hong Kong dollars, low is 25 Hong Kong dollars, median is 41 Hong Kong dollars. There were a total of 30 analysts that were included, and 25 held a buy or outperform. And our recommendation was 42, but we used a different valuation method. I think most of them used group level DCF. But for a more detailed valuation, we chose to use SOTP to better capture each segment's valuation.
I think in your dew point analysis, it shows that you expect margins to improve, but the return on equity is almost half or less than half of where it's at in the long term. I was wondering why that is and whether you think that's a risk to your valuation going forward.
I will address that the margins are upside for a small trend, but the ROE are downside. So first, we believe that the ROE, especially in 2025, is a little bit overvalued because Xiaomi holds a lot of cash and do a lot of invest, including the anti-geopolitical investment or the anti-exchange exchange investment. So the ROE may be a little bit overvalued. And when transforming into the EV sector, we will find that the margins and the ROE may have short-term pressure due to a little of transformation, but we also benchmark them to the key pillars from the segment. We find that in transformation to EV, Xiaomi will also host its own potential advantages brought in by the maturity of AIoT and the internet, which have equipped Xiaomi with the capability to light asset operation or the high margins or the high revenues. When transforming to the EV sector, Xiaomi also can catch up other EV competitors' revenue taker so that it can also remains a high margin rather transform into a high growth.
Probably a small point to add on, the 2025 ROE is like an outlier because it holds a huge amount of fair value adjustment in its investments. That is why the ROE is higher. And in the future, as cash obtains, ROE and ROIC would definitely kind of show a downsiding trend. And because my teammate mentioned the EV business transition, right, asset would definitely increase as well. So we would say in terms of like numbers, it probably is showing a kind of like short downside and then flat curve. But in terms of business healthiness, it's still good. Yeah.
Um, on the ESG front, you talk a bit about the dual class structure. Can you say a little bit more about how you factor this into your ESG analysis, and would there be any kind of discount that you think the market would factor in?
Please turn to the ESG slides. Not the appendix, but the slide. Okay. Sorry, wait a minute. Okay, the governance, the next slide. Okay, as we can see that the dual class structure means that Lei Jun actually he holds 23% of the whole common shares, but actually he holds like a lot of A shares, so it's approximately 64.1% voting power. That's called the dual class structure in the Hong Kong exchange structure. So we basically believe that this kind of structure actually provides a unique stability for a unique company like Xiaomi, because for Xiaomi it is actually pursue a EV strategy which requires a long-term contribution and a lot of resource focusing on this kind of new business. So under this kind of dual class structure, it makes sure that Lei Jun take the voting power, and he can actually devote a lot of his focus on and contribution to this kind of business that requires long-term contributions. And also this kind of dual class structure actively uh, actively combines Lei Jun's self-interest with the company's long-term strategy. So that's basically something about the shareholder alignment. And in the market, I know that a lot of analysts. Okay.